centers, because that's not our core business. So you would have the ancillary service providers, you would have your infrastructure costs, again, servers and everything needed to run the platform. And that's predominantly engineering headcount and customer support to support those customers once you do acquire them.
Thank you. So Ryan Channer from Jayex Technologies, this one's for you. So to achieve growth in a SaaS business, where would your company typically focus its spend?
Thanks, Jane. Great question. Hello, everyone. Well, to achieve a level of growth in SaaS, there are a number of areas I would suggest focusing your spend. We've obviously already heard a little bit just now around cloud infrastructure, hardware spend. So I'll break down a few internal areas I'll suggest that are also important to spend on. So firstly, ensure you're investing in your customer success function. So building out a high-performing customer success team focused on mitigating that churn and growing accounts. And that really ensures that you're not undoing the efforts at the other end of the funnel with your customer acquisition that David mentioned earlier. The litmus test for any growing SaaS business is always its customer retention. And retention, of course, validates that product market fit as well, especially for those in the startup phase. So tied to that customer success investment is growth in your accounts. Now, you can, of course, achieve growth incrementally through pricing strategy, subscription tiers. However, the biggest impact on contract value is being able to cross-sell new products, and therefore spending on product development, expansion, diversification is also a key area of focus. Other software vendors that continue to innovate, add new features, bolt-on modules, not only encourage growth, but they also get deeper embedded into their customer technology stacks as well, making them even more sticky as a supplier. So when you combine spend in new product development, leading to deeper integrations with your customers, coupled with that increased contract value, you really do start to create that positive sort of flywheel for growth. All of that combined provides the foundations of a sustainable SaaS business poised for growth, and ensures your sales and marketing spend on new customer acquisition is also effective as well. And then finally, investment in your onboarding function is really important. It's one of the most important elements of any customer journey involved in software deployment. The larger and the more decentralized a customer is, adds to the challenge of effective implementation and therefore early adoption and engagement as well. Therefore, spending resource on building an effective onboarding function not only aid rollouts and ramp up, but also reduce your time to value as well as a business. This is particularly important for those SaaS businesses that are reliant on daily engagement for revenue and not just annual subscription fees for growth. It doesn't matter if you're onboarding people via a self-serve model or one that requires lots of human capital and project teams for a rollout. Whichever end of the scale you're on, it needs your investment. Thanks.
Thanks. And the final question is for Rob Bromwich from Intelli Hr. So what does an investor need to look for when considering an investment in SaaS?
Thanks, Jane. I think we've heard all about the metrics of SaaS businesses, but fundamentally it comes down to really whether the software solves a meaningfully sized problem and also in a sustainable way. So breaking that down, is the problem they solve important and relevant? What is special about how they actually solve that problem? Is it actually disruptive to incumbents, and how so? Also, I suppose, what is the size of the addressable market, and is it significant? Is it a blue ocean? And what's their approach to that? And what is the scalability potential of the business? And in part, that's the product, but more so, it's actually the go-to-market business model. And in my view, I suppose if we talk about the metrics, and obviously we spoke about a few there, but capital efficiency is something that I would actually pay attention to. So how well are they actually using their capital to generate value from their customers? Sales efficiency, which is essentially that CAC to LTV. So what's the cost of customer acquisition compared to the value that they're actually generating? Churn, so we've heard about retention as well. So are they losing customers, and at what rate? Because obviously if they're losing them, they need to top that up as well. Net revenue retention, and that really looks at probably the scalability also, within their actual customers to generate, increased value. and probably finally reviews and NPS. So are they actually looking after their customers? Their customers like their product, and that's a really sort of key thing from a sustainability perspective, a brand perspective, but also market penetration.
Perfect. Well, thank you to all the presenters for participating in the discussion, and I'll now ask you to please mute and turn off your cameras while we run through the presentations. So up first, we have a presentation from Bigtincan Holdings with the ticker code BTH on their leading AI-powered sales enablement platform. So to tell us more, today we are joined by Bigtincan CEO and co-founder, David Keane. Good morning, David.
Yeah, so good morning to everyone. Really great to be with you. So I'm going to actually be using Bigtincan to do my presentation. That might be a good way of getting started together. Jane introduced Bigtincan as a leading provider of AI-powered sales enablement software. And that's exactly what we do. We exist because we know there is a significant market opportunity for us to be able to help human beings to be able to connect with their customers and build the buyer experiences of the future when they go into this new economy. And so to talk about how that technology works, we're going to be using the Bigtincan platform to actually come in and give my presentation here. So we're going to do that, and we're going to jump in. So I think before we start, I think it was a great point there about, is this really going to solve a big problem? And what we've seen is that in today's digital world, buyer-seller interactions have become faster and more complex than ever before. If you think about almost every time you engage on the buy side of a transaction, you are better informed and more prepared than you've ever been due to access to digital tools. And the people that you're working with are often at a point whereby they can be at a disadvantage. And we know that if we can address that buyer-seller interaction and we can create a new experience, which we call the buying experience of the future, we can connect buyers with the best possible outcomes through technology-empowered customer-facing teams, we will make a significant difference in the multi-trillion-dollar economy that exists today. And our software has been designed from the ground up to solve this problem, and it's been market tested now across more than 1,000 deployments with some of the world's leading companies in core vertical sectors, including life sciences, financial services, retail, telecommunications, and technology. And we know that this market opportunity is something that will generate significant returns for our investors over time. Now, to give you a bit of a view of kind of, I guess, the impact of the work that we do, these are some highlights from our first half FY21 achievements. And I want to cover a couple of them for you that I think will give you a bit of a view into Bigtincan. Starting with financial results. So our annualized recurring revenue grew 50% year on year in the first half of FY21 with strong operating metrics, including our LTV to CAC. It's a lovely metric, which we do use here internally, our gross margins and our retention rates all really strong. But I think what's important is Bigtincan continue to invest in building the technology that makes a difference for these leading customers that choose to use our product in the market every day. And our technology has been backed by a combination of an organic growth engine that I'll talk about in a minute, together with strategic technology-focused M&A that's enabled the company to execute on accelerating our roadmap as we've continued to grow into this large market space. Now, that track record of growth goes back to the company's listing on the ASX in 2017. And again, first half FY21 for us was pleasing, with strong growth in our ARR, our retention, our LTV, and other key metrics. So the company does see that that growth track record is something that has been consistent as we've been able to take advantage of our market conditions. Some highlights for you from the recently announced 4C that came out in April. I think some of the points here, I think you can read them, and these materials are available on our investor website. at investor.bigtincan.com. But to me, some of the most exciting things about the first quarter of FY21 was continued growth in winning new customer deals in a time, remembering January to March of 2021, certainly an unusual time still in the world with the impact of the virus. We saw new key wins in key vertical markets, including organizations like Sanofi in life sciences, ABB, and others, including Winnebago, the RV company you may have heard of, choosing Bigtincan for a pretty significant deployment. And our technology continued to advance in this quarter as well. We conducted an event called our Investor Product and Technology Day event, with a video recording of that event available on our investor website, as we talked about some of the new products and technologies that we're launching and the impacts of those products on our growth for FY21 and beyond. Bigtincan continues to be a global company, and I mentioned the importance of investing in North America, and this chart gives you a bit of a view of the geographic spread of our teams. But in terms of revenue, we're 90% or so US revenue, and whilst that's been an important foundation for our company to get out and win those lighthouse deals that we can grow from, and many of those US-based companies deploy around the world, our company is focused on a global market, and we believe there are significant growth opportunities for us in Europe and Asia over the coming periods. And the investments we're making in our product team, and you can see that on the little right-hand side chart there, continues to be strong, and we're convinced that those investments add real value to our investor base as we build better capabilities that can drive that cross-sell you heard about before as we grow the company. Now, the market we operate in is a large one. There's some numbers here from some market analysts talking about the 3 key sectors that we operate in: sales, coaching and training, sales enablement platforms, and sales engagement, each of those markets being a multi-billion-dollar market. And as Bigtincan continues our growth, we see these growing market spaces, and these, if you like it, think of it as expanding total addressable market areas, are kind of the spaces that we want to grow into. And the company is using its technology investments to build offerings in each of these core pillars. And we're using our cross-sell, both through our network of team members who work with these enterprise organizations, as well as our network of channel partners that's in place around the world to bring our technology to customers in these marketplaces. We see that as being an important part of the company's strategy into, of course, FY22 now and beyond. How do we sell our products? So we sell it like a traditional SaaS company sells. We have multiple offerings: Bigtincan Enterprise, Ultimate, and Ultimate Plus. Each of these offerings has different features and functionalities that our customers can choose to buy. But importantly, customers can bundle services together. And one metric that I thought was really interesting from our first half FY21 results was that the company achieved 20% of its annualized recurring revenue, so 20% of the ARR, came from customers buying 2 or more modules from Bigtincan. That's the first time we've been able to give a number like that that shows the scale opportunity of that cross-sell and upsell opportunity. And we were really pleased with that. I think you're going to see more of that as the company continues to bring together these offerings and insist that our customers to be able to take advantage of those multiple offerings to build a single unified solution from the company. I talked about our strategy of combining our organic growth engines with an M&A program that's focused on identifying opportunities to accelerate our roadmap. Now, every M&A deal the company does is focused around 4 key pillars. First of all is positive financial impact that we measure by looking at the cost to acquire any customers and revenue that comes with that business against the way we're trading. We look at the technology that's coming in from that acquisition that adds to our core technology base. And that acquired technology becomes a part of our organic growth engine in future periods. We bring in great people from that program of M&A, and you can, certainly building tech companies around the world is challenging. We're really fortunate to bring in some amazing people, both through our organic hiring programs, as well as our work with M&A. And of course, doing things to build up the go-to-market and the scale and reach of the company. And again, we see opportunities continuing in our market space to be able to accelerate our roadmap and bring new technologies to market that we can then cross-sell and upsell to existing customers, and also build as a base for future revenue growth in new periods. Now, this is a chart that I really love, and I feel if there's one chart that gives you a bit of a view of what Bigtincan Holdings is all about, it's this one. This describes our diversified recurring revenue base, and certainly for investors, this gives investors a real view in terms of how the company is performing and why that diversified recurring revenue base is so important to generating what we see as not just future growth, but real value for our investors. So I'll just go into a couple of these kind of donuts that you see on your screen and give you a bit of a view of why they're important. The left donut, ARR by vertical, gives investors a bit of a view at the distributed nature of the customer base, and you can see a bunch of vertical sectors there. And I think that just gives you a bit of an insight into the ability for the company to win in key vertical markets. Second donut gives you a bit of a view of where the revenue is coming from. Third one talks about recurring revenue versus some non-recurring. So we do still sell some services and training and things that go along with our products, but the vast majority of revenue is those recurring services and customers that are taking traditionally a 12-month contract. And the last donut on your right talks to that point we were chatting about before, where 20% of the ARR at the end of December 2020 was coming from customers that were buying 2 or more modules. And again, that's really pleasing to see that. We think that's a strategy that the company is executing on well as we continue the growth path. And I think you're going to see more of that in future periods and more diversified revenue base across the products that we offer. So looking forward into the future, I want to talk about a couple of things that I think give investors a bit of a view of how we think about the opportunities for growth in our market. So the first of these charts on your left-hand side just talks about, I guess, some of the market opportunities. Bigtincan is a growing company, is performing well, but we still see significant opportunities for growth, both with new customers, as well as with further penetration into the existing customer base. And some of the customers we have present unique opportunities for us to be able to continue to sell more users, more seats, broaden the coverage, as well as deepen our revenue with that cross-sell and upsell we talked about. Now, the chart on your right talks about our growing ARR per customer. And you can see here that the majority of Bigtincan's business was customers that were spending $50,000 ARR or more with us. Now, that's pleasing because it just indicates the value that these customers place on our software. This is software that works. It's making a difference. If you're prepared to spend $50,000 or more on that software, that it's working for you. Interestingly enough, at the end of 2020, the company did an acquisition of a company called ClearSlide that brought some new technology and some wonderful people into the business, but it also brought about 500 new customers. Now, those new customers are actually smaller customers coming in. Their average revenue is less than that 50. It's more in that kind of $14,000 level. So it's a smaller number, but presents significant opportunity for growth and cross-sell into that base. So we see opportunities for us, not just to continue to penetrate into existing Bigtincan customers, continue to sell more seats and more depth, but also to be able to take advantage of these new customer bases that come into the Bigtincan environment and be able to grow the value that we're delivering to those customers going forward. So again, really great to have a chance to talk to you. And certainly from a Bigtincan point of view, we see these ongoing market opportunities presenting a strong platform for the company to continue to grow into FY22 and beyond. So thank you so much. And I'll hand back to Jane.
Thanks for that, David. I might just get you to stop sharing your screen there. Well, thank you for your time today. And as always, the presentations will be available on brokerbriefing.com. So up next, we have a presentation from human resources technology company, Intelli Hr, with the ticker code IHR. Today, we are joined by founder and CEO, Rob Bromwich. Good morning. Oh, Rob, are you there? Sorry, you're on mute still.
Ooh, there we go.
There we go.
You caught me out there. I thought I was coming up next.
Yeah, sorry about that. I'll just pull up your presentation.
Thank you. And if you can move to the next slide, please. The next one, thank you. So yeah, thank you very much. And IntelliHR is a HR and people management software as a service application. For our customers, we support them in terms of full HR digitization. So most of our customers, 80% of our actual customers, actually don't have anything looking after their people apart from their payroll system. So largely paper and Excel are the type of tools that they might actually be using. So we support them with digitization, process automation, compliance management, performance management tools, and also feedback and wellness. And the big shift, I suppose, that has actually seen IntelliHR, particularly over the last 18 months, go through incredible growth has actually been the change in workforces that was brought on by the global pandemic. And when we set IntelliHR up, we always wanted to be a business that operated in that global market, and that's because to look after your people, you can't see them, they're not physically in around you, and your workforce is actually distributed. And along came the pandemic, and every business became a distributed workforce and required tools that IntelliHR actually provides. On top of that, our special USP, I suppose, is our people data visualization and our analytics. So we provide very meaningful real-time insights around sentiment analysis, but also just performance of people. Next slide, please. From a return on investment perspective, IntelliHR for our customers, we actually help optimize their administration costs. So we reduce costs, we increase employee engagement and also wellness, and particularly in distributed sort of workforces today, and through what we've been through with the pandemic, that's been very important. We support them to help them build higher performing teams and improve productivity, and that's through better alignment, goal setting, continuous performance and feedback tools. And we also support them to reduce turnover and make better decisions based on data. So very much about supporting our companies get value out of our application, not only at a financial level, but at a human level, in a sense of improving their workplaces. Next slide, please. In terms of IntelliHR, it's always been about actually positioning ourselves away from, I suppose, the pack, in a manner of speaking. So as mentioned earlier, it was about targeting global businesses, or if you employed people, you needed IntelliHR. We identified that our ideal customer actually has an enterprise payroll system, because typically they don't have too much else outside of all of that. So we really focused on building a product that actually supported larger enterprises and at a really affordable price point, which enabled us to compete in a nice sort of sweet spot in terms of customer sizes. And our ideal customer typically employs about 200 people through to about 2,000, but we actually have customers on our platform up to 10,000 employees scattered around the globe, so to speak. So the configurability of the application, the scalability of the application, competitive pricing in that market segment has really given us some really clear space as a product. Next slide, please. And like I said earlier, I suppose if you look at SaaS businesses, is the product good? And IntelliHR continuously actually rates 5 stars out of 5 stars, or 10 out of 10, and has been an award winner on the back of the reviews and the service and support that it actually provides to our customers. When we look at our competitive positioning on a grid in the HR analytics, we're right up to the high performing sort of area, and as we grow and I suppose increase our market presence on a global footing, I can certainly see we'll move up into that leader pack and really occupy that space quite comfortably. Next slide, please. And speaking to probably customers and our positioning, we've really worked hard to actually build a very strong sort of, I suppose, logo, of customers. We've got enterprise customers now in all key operating markets that we actually support. Certainly here in Australia and New Zealand, we have some prominent brands, including Baby Bunting and My Health Medical Centers and Scope. In the US, we actually have BBM Vircon, which is a global engineering business operating in 8 countries, based out of Phoenix. In UK, we have Arup, which is another global engineering business. We recently won a contract to support a rail infrastructure project, in London, which is quite exciting. New Zealand, we have Contact Energy, the second largest energy provider. And in Northern America, we have OSL, a retail services provider that employs, I think, roughly about 9,000 people across Canada and also the US. And excitingly, that's put our application into Walmart and Samsung and Bell Communications. Next slide, please. Our global presence. So a key thing, particularly through the pandemic, oddly enough, was to actually continue to expand our global reach. So prior to the pandemic, we were based in Australia servicing, the world. We've now since actually spun up operations and sales and service, on the west coast of Northern America in Vancouver, on the east coast in Toronto, in Canada there. And we've recently positioned team members in the UK, so specifically in London and Manchester. So we now actually have a 24-hour clock around sales and service, but supporting those markets locally, which is really important. And on top of that, a very big engineering project over the last 18 months to transform our front end, to be able to actually provide our customers language translation. So localized language for all people around the world. At the moment, we have French Canadian in supporting our Canadian operations, but shortly we'll be rolling in another 12 languages, which will expand, I suppose, our ability to serve new markets. Next slide, please. Financial performance, it's something that we're incredibly proud of. And, in the last 12 months, we've grown quite rapidly, and we've gone from 13,000 subscribers to just under 37,000 subscribers. So 24,000 subscribers added very quickly. Our revenue base, again, is actually growing quite significantly, up from 2.2 to 5.1, and we're accelerating at the present point in time. And when we look at our customers on platform, being a young company that listed in 2018 pre-revenue with 10 customers, we're 3 years later now actually about to add, we'll have 200 customers, and we're adding customers at 40 new customers a quarter. Next slide, please. New converted ARR by quarter. So just the last 3 months, we've added just on 800,000. And as you can see with our chart, we're continuing to accelerate with our customer acquisition as well, going from 24 new customers to 39 customers. And again, as we actually add more customers each quarter, just projecting out, it's very easy to say, well, if we're at 200 and we're adding 40 a quarter at this point in time, that easily the business will have another 160 customers added, just in the next 12 months without us actually growing any further, maintaining our levels. Our implementation revenues, and yes, SaaS businesses are all about ARR and recurring revenue, but our implementations are providing services that are actually setting up our customers for success, and obviously we want to be remunerated accurately for that. Our average customer is roughly around 20,000 at the moment, and our focus is to continue to actually grow that. And recently our focus on enterprise customers and acquiring more of those is only actually going to shift that upwards. Next slide, please. We're talking about customer lifetime value, and this is probably one of the most remarkable things. And when I talk about capital efficiency earlier, this business has raised $23 million in its lifetime to create IntelliHR, and obviously we still have quite significant cash reserves in the bank. We've now created a book of customer lifetime value of almost $39 million. So the capital efficiency that we've actually got is quite remarkable, and it's accelerating. So just to add essentially $22 million in the last 12 months is a testament to the success of the business and the hard work that the team has actually put into not only look after our customers, but to acquire new customers. And our retention is very high. It's quite minimal. Next slide, please. So the business has always operated on the high growth SaaS, sort of playbook, and from that perspective, it was all about getting product market fit. And once we hit our 1 million ARR and gathered enough customers there, we saw that we actually had that. Getting to 2 million, we've achieved that, and then it was all about then tripling, and that was always through expanding the reach on a geographic sort of perspective, so that we can actually service the globe. And we've now successfully rolled out that footprint where we actually have every single time zone covered that we can actually sell to and support. From there, it's about then actually tripling through online sales and partnerships, and the business has been investing very deeply into partnerships, not only within our ecosystem of HR technology, but outside of that, and also with service providers. And we see that as an accelerator on top of our actual success in direct sales that we've been building on, and then basically moving out to new markets, rivaling the US and UK markets, and then continuing to grow at a rapid rate. Next slide, please. And that's my presentation. So thank you very much for having me, Jane.
Thank you so much. I'll just stop sharing. We've actually had a question from a webinar attendee. They're asking about, could we please have an update on the company's European operations?
Yes, at this point in time, we've literally just put 2 team members into the UK. So we have an account executive to sell, so to speak, and also a sales development representative. So for the moment, we've bitten off a lot going into Northern America. The US is an incredibly large marketplace, and obviously we've been successful in the short term, but we're investing into our capacity to make sure that we entrench ourselves into Northern America. UK, it was actually planned for a little bit later in the year, but we had a lot of inbound traffic coming in, and we've seen a lot of demand for our product. Winning Arup there, which starts with 1,000, but will grow out to possibly 10, 12,000 users on our subscribers on our platform, was an incredible win. So investing into that market to see a continuation of growth. Europe, will look towards that market later in the year once we feel we've got both Northern America and the UK set up properly.
We're running slightly over, but there hasn't been another question that's come through. So I'll just, so how long does it take for customers to see return on investment on the IHR platform?
Yeah, I think for a majority of customers, we're replacing paper and Excel. So instantly we are providing them visualization of their data. Strangely enough, a lot of our customers, particularly global operations, for the first time they can actually see how many people they employ where, is one of the things they see, quite excited. But our sentiment analysis tools, our feedback tools, our performance tools give them instant value by understanding where their people are and how they're performing, and where they can actually make improvements at an operational level, just simply by centralizing all their people data and taking things out of Excel saves them weeks of admin time, let alone accessibility that they get out of that.
Wonderful. Thank you for that, Rob. And of course, all presentations from today's webinar will be available on brokerbriefing.com.
Thank you.
So next we are joined by Jason Waller, who's the Managing Director and CEO of health technology company InteliCare Holdings with the ticker code ICR. So to tell us more, I'll introduce Jason.
Thank you.
I'll bring up your presentation. I'll let you jump into it.
So InteliCare is a technology company operating in the age and disability care space. Next slide. Next slide. So what we do is we turn any home into a smart home by installing a range of sensors, and then using an app, we connect our sensors to our IoT platform and use AI to look at what's normal behaviour in that home. And then we send alerts out to family and caregivers when something's out of the ordinary. And by doing so, we allow people with a disability to live in their home safely, or people who are elderly to live in their home for longer and avoid residential aged care. Key highlights, it's obviously a very strong market trend at the moment, and I'll talk more about the aged care space, but I think it's never been more dominant in the conversation within Australia, and particularly within investment. We have our own IoT platform, that's our secret sauce. And also the government funding behind this is increasing. Our product can be purchased both by a home care package, and the government recently announced another $8 billion into that funding, and through NDIS. As we've already discussed, it's a SaaS business, so there's high margins on our recurring revenue. And we're using AI and machine learning to do something that hasn't really been done before in this area. We listed on the ASX in May 2020 and have continued to start to scale our business and grow commercially since then. Next slide. It's a very topical space, as I mentioned, and not just within Australia. We're following the Royal Commission. The government implemented another $10 billion to boost aged care, but internationally as well. Biden has pledged similarly at $400 billion into healthcare, and particularly with a focus on allowing seniors living in their home for longer. So we're exploring our international expansion plans at the moment. Next slide. Since we listed and sort of a comparative time last year, we've grown quite considerably from 25 units in the field to about 450 under contract. Our revenues have been increasing quarter on quarter. From our last reports, we had a 911% increase in cash receipts, coming off a relatively low base, but nevertheless, it demonstrates we have strong market traction and product to market fit. And on the back of that, we recently raised another $2.5 million to expand our presence on the east coast of Australia. Next slide. When people think about the aged care industry, they often think about nursing homes, but it's much larger and broader than that. Care in total is about a $40 billion industry in Australia when we combine aged care and disability care. And a lot of that growth is being driven by the baby boomers. So there is a macro trend here that we're capturing. The baby boomers are moving from their retirement phase into their aging phase. And simply put, government spending is trying to keep up with that, but can't do it. Next slide. So what we're seeing is market stress as demand starts to outstrip the ability of care providers to supply. Aged care homes, like nursing homes, are mostly unprofitable. And even in home care, those that send people out to look after people in their own home, the EBITDA per client has been decreasing year upon year. As the Morrison government has thrown more money at the problem, they're starting to catch some of this downfall, but nevertheless, there's going to be a significant market for people who want to stay in their own home. Next slide. And when they do so, they turn to technology because they don't want to end up in a nursing home. However, the primary source of technology that keeps them safe are pendants. So they're like duress systems, alarm devices that might be worn around the neck or have a button sitting on a bench somewhere in the home. The main problem with those is people don't use them. In 80% of falls, people didn't use their pendant. And even in nearly 30% of the falls, even when they had a working pendant, they were lying on the floor and not willing to press it. But most importantly, those competing technologies are fatally flawed in that they're just duress systems that respond after the event. They do nothing to predict or prevent events occurring in the first place. Whereas InteliCare's system does both. We do both detect the events and we're starting to increase our ability to predict the likelihood of events, but we provide this prevention element to stop them occurring in the first place. So rather than waiting for someone to, metaphorically fallen off the cliff, we catch them before, as they're walking to the edge. Next slide. How do we do it? Well, in the first step, we install sensors in the home. They're not cameras, they're not invasive, and importantly, they're not necessarily wearables. A big problem with wearables is the elderly in particular don't like to wear them. They require charging and there's gaps in their coverage as a result. We have an open IoT architecture, and what that means is we get the best and brightest sensors and integrate them onto our IoT platform. We aren't a sensor manufacturer. All the sensors you see, such as movement detectors, door detectors, power sensors, including pendants and smartwatches and voice devices, are manufactured by others, and we're an integration platform that brings it together. We can then use that combination of sensors to learn what's normal behavior in a home in step 2. such as how often people are moving around, when they're up each day, what their meal activities like, and when they're becoming social isolated. All of those elements are key predictors of deterioration in health and well-being. And then we send out an alert to family and caregivers in step 3 when something's out of the ordinary. Importantly, on the app, the family will also get a push notification to their phone when everything's okay. So they don't have to live inside the app. They can just look at their push notifications. For professional care organisations, which represents about 80% of our revenue to date, they use a dashboard to monitor multiple clients at once. And then step 4, we look for increased early incident detection to try to get ahead of the event. So for example, if they're looking at increased bathroom usage, then that might point to an undiagnosed urinary tract infection, and UTIs are a major cause of a fall. So we'll see that before anyone else does, and hopefully before the trigger event that will cause loss of independence occurs. Next question. So we take a layered approach. At the bottom of the layer, we have our core client intelligence. These are the passive sensors, the movement sensors, door-to-door sensors, power sensors. On top of that, we've also integrated emergency alerting system through smart devices like watches, pendants, and also voice activation, including we're integrating Amazon Alexa at the moment, and other devices that can provide that real-time emergency alerting. And then more recently, we've also put on top a vitals and health metrics layer, so we can start to track pulse, blood oximetry, rests, and heart rate. And particularly for GPs and super clinics, they become critically important to provide that additional layer of intelligence. Finally, servicing that through our Pro dashboard in the app using our artificial intelligence to provide a whole coverage with very few gaps in the whole system in terms of remote monitoring. Next slide. We surface the data through 2 forms. There's our B2b interface, which is IntelliCare Pro. The clients there are bulk purchases, they're care providers that either have a care in the home business or residential aged care, or even, and we're looking at now hospital in the home as well. They're larger purchases, larger accounts, but they have a longer lead time, but it allows them to increase their productivity and deliver care to where it's needed most. For the family, they consume via just the app themselves, so they and all their carer will use the app. It's a low-cost way of ensuring that they don't have to keep responding and checking in each day. Next slide. So across the board, we're targeting these verticals, certainly independent living, as I just described, for the consumers themselves, particularly the sandwich generation, those people who are caught between looking after their children and their elderly parents as well. For governments, it's all about reducing the aged care tax burden and transmission pathways during COVID-19. But our central value proposition is with elderly and disability care, targeting those home care providers in particular. We're also starting to talk to hospitals, particularly those using hospitals in the home, and with a target of reducing the transmission and the readmission pathways from people exiting hospital and then being readmitted. And lastly, insurers, particularly in the United States, where they can use it to reduce their underwriting risks, where they have private health insurance and people want to avoid going to residential aged care, which is more expensive compared to home care. Next slide. As I said, we have a SaaS business, but we're slightly different to some of the others. We do charge for the hardware up front. So you can think of it like a telecom business where you have the initial purchase of the sensors and then an ongoing recurring fee for use of the app. We also provide a rental model where they can bundle in the hardware and the software costs under just one recurring payment, and we've done sales for both at the moment. Our aim here is to not provide the hardware at a high margin, but a reasonable margin. And that really can become part of our customer acquisition cost by reducing that margin to increase the SaaS part of the recurring revenue. Next slide. So we're going out through B2B. Through that part, we're targeting the aged and disability carers. There's about 1.1 million people in Australia under that care model. As I said at the outset, most people think of nursing homes as the core market, but there's only about 200,000 people who are in nursing homes in Australia. So on a unit basis, the home care industry is much larger. It's about 5 times larger. And then another 3 to 4 times again is just the B2C consumer business, targeting those end users, families who either have someone under a care package or are financing it themselves out of their own pocket. And then lastly, through distributors and agents, either retailers who provide other mobility devices and aged care and disability care systems and assistive technology, or those businesses such as the care providers themselves, who can then upgrade as an agent towards the end of to the end users. Initially in Western Australia, if we achieved about 3.2% of that market, we'd come close to break even. Next slide. More recently, we have grown that channel for B2C through to consumers, particularly targeting the eldest 45 to 65-year-old daughter in the family who often wears that burden. We made a recent announcement looking at the results from their campaign. It's been significant, particularly the TV portion. We've gone across all channels, including TV and radio. We recently rebudgeted so that we moved some of the radio money to TV where it was more productive generating leads. And we're now starting to show good conversion rates of those leads at the consumer level into ongoing sales. Next slide. So in the future, where are we going? Incorporating next generation sensors and devices to improve that intelligent incident protection. Increasing our machine learning capability. We recently received a government grant to partner with the University of Sydney and Macquarie University to improve our machine learning so we become much more predictive and start to really get ahead of the events in the first place. And lastly, integrating our system with client systems, so their case management and client management systems become part of IntelliCare and are fed automatically and under one workflow. Next slide. Our execution team, we have Greg Leach and Mike Tappan, who are the co-founders, and myself. We all have significant ASX experience building and exiting from technology companies. So it really becomes a commercialization and execution problem at this point. Next slide. As I said, we recently raised another 2.5 million on the ASX, and we listed at 2.5 times our listing, probably a little bit overcooked at that stage, but we've stabilised at a good price at this stage. And I think with the kind of recurring revenue we'll see from future contracts, we'd see the typical SaaS uplift in the share price. Next slide. So in summary, it really becomes a execution problem. I think someone will occupy this space. The aged care industry really is in crisis worldwide and is begging for this kind of solution to increase the productivity of care providers, underpin their risk associated with this rise in demand, and provide consumers with an alternative to placing their parents in residential aged care. Thank you.
Well, thank you for that. That was great. We've had a few questions come through, so I'll jump into them. So what is the competitive landscape like in the US?
Similar to Australia, it's very much an emerging market. So we're a new category. We're not trying to displace an existing provider. I think the US is more prospective because of their lack of universal healthcare and the fact they rely largely on an insurance model. The competitors at the end of the day really are pendant and duress systems, which are rather ubiquitous in the market and a bit of a set and forget. We have seen from our initial foray into there that there is no dominant player that's would be trying to displace. It really is those pendant systems.
And I know you touched on this last part, but I'll ask it anyway. So the recent federal budget means a lot for the sector. So how are IntelliCare approaching it?
We're heavily engaged with the government, and we've had a lot of interest from them. We're trying to become part of the rollout of the solutions from the Royal Commission into Aged Care. IntelliCare was mentioned in the report. The biggest problem that the government will face with the increased funding is finding enough staff to deliver on that funding just from the services model. So they're wrapping in assistive technology as a new funding stream. That'll occur over the next 2 years if nothing with government moves quickly. But that, I think, will underpin this model in the future, where I literally speak weekly with members of government around this and promoting our product and, more important, assistive technology in general.
Great. Well, thank you for joining us today, Jason. We look forward to having you on next time.
My pleasure.
So next up, we have a presentation from Paul Glass from Nexion Group with the ticker code NNG. Unfortunately, Paul isn't able to join us for the live part of this webinar. However, we have pre-recorded Paul's presentation. So I will just bring this up.
Customer destiny.
Sorry, it looks like we had a bit of a sound issue. I'll just come back and start again.
Good morning. Thank you for taking the time to have a listen to us today. My name is Paul Glass. I'm the Group CEO of Nexion Group, ASX NNG. We focus on the deployment out of globally connected, secure, hybrid one cloud nodes. And really, it's about that global cloud innovation without any limits. Our path is, and our plan is creating our own global market brand and our own global marketplace we sell into by delivering on our customer experience and customer destiny. Important notice and disclaimer, as you can imagine. So I'm sure that you've seen a million of these before. They're pretty standard. So please take time and have a look at that. So this is really in essence what we're about, and in reality, what, how, and why is really the fundamentals of the group. What we do is we create advanced technology solutions, and part of that is we incorporate hybrid cloud, the expansion of our hybrid cloud nodes, global SD-WAN, as well as security, and we do this on a global scale. We're a technology company, we're a technology solutions company, and we deliver these solutions in Australia, into New Zealand, and with some global expansion sites on the roadmap. How do we do it? Well, our point of difference is that we have a disruptive mindset and the character and capability to help our clients to look at the expectations that they have of global technology and extend our nodes. So our point of difference is really the ability for us to be able to consider the whole of technology stack that is available at the moment across things such as software as a service, infrastructure as a service, security as a service, but more importantly, look to the future and look to how technology can adapt and change and the position that we play in that global marketplace. Why do we do it? Which is obviously fundamental to the reason as to why we get up and put a suit on and go to work. Because we choose to build our own market. We choose to make a difference in the global technology space. Although we're headquartered out of Australia, for us, our marketplace is yet to be determined. We feel and believe that the SaaS product and the typical product that will be determined in the SaaS layer does provide the software layer, but for our solution, it's about delivering the technology as a service and deploying out technology solutions into global locations. So for us, Nexium Networks is the company that was established a few years ago that delivers out the hybrid cloud solution. The cloud solution is about looking at the deployment of the Nexion One Cloud nodes and the culmination of the public and private cloud integration space. And for us, the solutions that we provide work across both the public and the private cloud sector. And for us, it's that integration piece that makes the two sit together. And our global vendors that we use to integrate into the stack, the solution is then deployable into key locations, and really is country and location agnostic around the edge delivery of what's available. But for us, it's about converged solutions and the solutions and the connection of the public and the private cloud to the hybrid cloud solution. The cloud solution that we deploy out is a full stack of solutions. And for us, we mentioned earlier, we're a technology as a service provider. And the solutions that we deploy into our one cloud nodes include software as a service, infrastructure as a service, cloud security. And as you'll see on the screen, it really is very focused around that technology as a service, facing around digital transformation. What we do is deploy out our hybrid cloud nodes into locations where hybrid cloud has a strong requirement. Strong requirements is really determined by the location of the city, but more importantly, the fact that public cloud is not as readily accessible. And hybrid cloud is about connecting the benefits, the two benefits of both a private cloud instance as well as a hybrid cloud. So for us, we're in West Australia, in Perth and Sydney, and then we will move into Auckland, as announced in the ASX earlier in the year. And the shift of these one cloud nodes and the deployment of these nodes into locations allows us to connect out our network and extend on the network in the partnership we have with Ariaka being a global SD-WAN provider. But not only SD-WAN, it's about the access to the infrastructure service and the SaaS products and the PaaS resources that are available in the cloud, and that interconnection with Ariaka. What that allows us to do is, as we deploy out our hybrid one cloud nodes, we're connecting workers in those locations to the rest of the global sites. So for us, it's very much a global play. It's about driving a technology and innovation into new areas. And the key for us is the ability to be able to be responsive and flexible and respond to the customer's requirements. They're trying to avoid containerizing products and offering software as a service, technology as a service, infrastructure as a service, and security as a service into these locations. The cloud elevation without limits concept for us is key and really does underpin our entire global branding strategy, because we believe that there is no limit to technology. There is no limit to the locations that we can deploy out. And there really is no limit to the software and the services that we can offer our customers, as long as we have a very strong underpinned hybrid cloud stack that can deliver out those solutions. So for us, it's about looking at key locations, growing out the hybrid cloud, interconnected to the Ariaka SD-WAN, and then deploying network with whole of technology services into those locations. We're very excited to be going to Auckland, the launch of Nexium Pacific. And for us, it allows us to then go into Auckland as a whole of technology services provider, not simply just deploying out a one cloud node. The company and organization recently listed on the ASX, as mentioned earlier in February of this year. And for us, it's about aligning ourselves with key partners such as IBM, Ariaka, Fortinet, and other vendors that deliver with us those solutions into those regions. So thank you for having listened to us today. We're very, very excited about the future of Nexion Group and the ability for us to look at new locations to deploy out our hybrid one cloud nodes interconnected to the Ariaka SD-WAN. And for us, where we understand the importance of the software as a service layer and the infrastructure as a service layer and the platform as a service layer, for us, it's really about the technology as a service layer and wrapping all of those different entities and the different applications into a whole of technology. And technology is really based around connectivity. And that connectivity piece is very, very important. So not only do we deploy software as a service, infrastructure service and the application layer, for us it's delivering all of technology into a solution set. And that's really determined by the customer needs in those locations. And for us at Nexion Group, it's not about what's now, it's about what's next. And for us, it's the delivery of those solutions that are able to accommodate the questions that the customer will ask themselves and ask us and say, what's next? What's next in technology? What's in the future of the cloud? What can we do with technology to make our customer service more centric and deliver a better experience? And that's really the fundamental of the organization. So we've got some strong global aspirations. We have a clear roadmap of delivery. We have a great opportunity and we will determine our market as we continue to expand out the solutions as well as entire new locations. So thanks for taking time to chat to us today. Software as a service conversations are always exciting. There's more software as a service solutions get added to the stack. Strong recurring revenue businesses built on delivering an application and delivering a solution as a service over a long period of time. And that allows us as a provider to have a strong recurring revenue model, but also for the customer to have the ability to be able to access a software without having to manage it or support it or make sure that they're always on the latest software and so forth. So it's a win-win for both the market and for both the customer, the market and the vendor. The trick is to get it right and to be leading the edge, leading the solution set. So thank you very much.
Well, thank you for that. So next up, we have a presentation from Ryan Channer, who is the head of growth for health software provider, Jayex Technologies, with the ticker code JTL. So to tell you more, I'll introduce you to Ryan.
Thank you, Jane, and hello again, everyone. It's my pleasure to present Jayex Technology today. Just waiting for those slides to pop up. Great stuff. Go to the next slide, please. So I'll start with a brief overview of Jayex Technology. From its early days as one of the companies to first introduce LED display technology to the UK, over the last 25 years, Jayex has really focused on bringing innovation into healthcare, creating advanced solutions for patient calling and self-arrivals. Today, we continue that commitment to innovation by creating and installing visual communication solutions across Australia, New Zealand and the UK, including the devolved nations of Scotland, Wales and Northern Ireland as well. With so few companies that have our domain knowledge, strength in the healthcare sector has seen us install our platform in over 6,500 sites, all of whom now rely on Jayex Technology to help them with the smooth operational running of their practices. We've become an industry leader, helping thousands of healthcare organisations, large and small, improve patient engagement, reduce pressures on their staff and modernise the patient experience. Next slide, please. The key to success at Jayex has most certainly come from our people, from the board and senior management through to each individual team across the business. Everyone brings a depth and breadth of knowledge and experience that has helped shape Jayex to what it is today. With decades of combined experience in building highly successful listed businesses to pioneering and monetizing innovative technologies, Jayex benefits from a wealth of experience helping drive its growth. Next slide, please. Diving now into our latest solution, I'd like to introduce you to the Jxconnect Platform. Jxconnect is a proprietary patient engagement solution designed for use in healthcare settings. So whether you're a local GP surgery serving a small population, a large community hospital, or a part of a network and an integrated system caring for thousands of patients each week, Jxconnect combines 5 exclusive modules into one cloud-based solution to support healthcare organizations of any size and location. So each kind of easy to use module caters for 5 different areas of patient engagement, including online booking appointments, SMS and email campaign management, surveys, patient check-ins, and patient calling as well. The unique selling point of Connect is its modular nature, meaning customers can choose which modules they'll like to use based on their need. And we, of course, have a tiered SaaS model designed around those modules and combinations as well. So all of the modules are actually designed to work together in a complete seamless solution, but they can also be used as individual standalone tools, as well as in bundles as well. So I'm pleased to say that many of our customers start with at least 2 modules in most cases, giving us a great base to expand those customers into other modules as well. Another key feature of Jxconnect is this interoperability. The platform is able to connect to multiple widely used patient management systems via API, giving practices the ability to benefit from all the platform's features, such as the updating of patient records, for example. And as a value-added element of the service, we do also install on-site equipment and then remotely onboard each practice via our implementation team, ensuring a smooth rollout of our solution. It's then followed with online training, webinars, and a wealth of knowledge in our online knowledge bases, for example. Next slide, please. Of course, the combined solution is designed to deliver some key results and key outcomes for both patients and for healthcare professionals alike. Patient convenience via our queue management module, increased throughput of patients achieved by having more efficient system in place, which results in clinicians having more time to see patients or have the flexibility to spend more time with patients that need it. Increased productivity for staff, both patient-facing as well as administrative and back office, enhanced patient experience, especially for those that are infirm, aging population, or have disabilities, and of course those that simply just lack the time in their day. We also see reduced no-show events with patients able to reschedule or cancel appointments with ease. No-shows are particularly problematic for practices, costing both time and money, both of which Connect platform can help alleviate. Now, some of the other outcomes include improved patient data collection, allowing for much easier updates of patient records. It also helps healthcare organisations with the paperless agenda, particularly in the UK, whilst at the same time improves overall efficiency through digitising communication processes, leading to even more time and money saved, really building on that overall return on investment for our customers. And finally, studies have shown that staff are also much happier at work with platforms such as Connect, with greatly reduced stress levels. With the pandemic having such an impact on frontline staff over the past 18 months, it's never been more important to remove such stresses as wherever possible in healthcare, as well as add to the efficiencies mentioned as well. So particularly while those practices around the world continue to deal with COVID, and now also long COVID, in addition to all the conditions they were treating pre-pandemic. Next slide, please. Now, much of this wouldn't have been possible without the fantastic integrations and partnerships we have with some of the world leaders in clinical systems. The interoperability mentioned earlier is only possible because we work so closely with each partner to ensure we continue to innovate and deliver value to our customers and their patients alike. Some of the names you see in front of you are some of the leaders in our core markets for all of those systems. And to make those integrations as rock solid as possible, we use API connections, and where API doesn't exist, we obviously work with those partners to create new integrations and to essentially just serve our shared customer base that we have with each of those customers. Next slide, please. And finally, the future really is bright at Jayex, with a roadmap full of exciting new developments, markets and partnerships as well. To start with, we're exploring new segments within the wider healthcare space, all of which fall into our ideal customer profile, including NHS practices, in particular, a renewed focus on primary care. It's a disparate market, and so we see lots of value and opportunity within that space. Private practices as well as community mental health trusts. Dental, which is a somewhat underserved market in some areas, and so we see some real potential there, as well as optometry, which also falls into that underserved bracket, which we feel that we can really fill some gaps and add some value for optometry customers as well. On the product side, we've got some really exciting new technologies we're exploring, including remote patient monitoring, clinical systems, including patient management systems. We're exploring body scanning technology, which would take us into the realms of diagnostics and clinical support, and AR-driven applications as well, which is, again, a really exciting area where we're now exploring as it moves us even closer to clinicians and their work. It's been fascinating looking at how we can use our collective experience to support doctors and their patients, whether in the practice or remotely, as we've seen more and more patients now also embracing healthcare technology, which of course jumped during the past 18 months, most notably with video consultations, which saw a significant surge during the pandemic and shows no signs of slowing down, as well as, of course, the general upward trend in wearables such as fitness trackers as well. And these are all exciting areas that we're exploring. And of course, all of the solutions we're exploring will also be designed to fit into a SaaS model with recurring revenue as well. And the great thing about all of these new innovations is that Jayex is, of course, perfectly positioned to introduce new products into the market with thousands of existing customers, providing us with a fantastic cross-selling opportunity to support our go-to-market strategy. And then finally, while much of this drives the organic growth within the business, we are also actively working on new partnerships and integrations as well. So exploring potential acquisitions to further propel our growth in the coming 12 to 18 months as we continue to increase our footprint in healthcare. Thank you, Jane.
Well, thank you for that, Ryan. We've had a question come through from a webinar attendee just asking about what drove you to your new sales role at Jayex.
Yeah, it was a really exciting opportunity. What drove me here was actually the opportunity for the growth element, as my title may well suggest. But it was really because there's an underserved market, particularly in primary care, and technology within healthcare is a really, really exciting space. It's where a lot of innovation happens, and that's really what drove me. I could see that Jayex, with its history, its depth and breadth and knowledge within the space, was fantastic. But there's also so many new opportunities out there as well, particularly around using big data and AI. We've seen lots of that happening, and it is quite disparate. And but it's still a very exciting space to be in. And I feel like we can really fill a gap in a lot of those markets with some of the things that we're developing. And so that was an opportunity I didn't want to pass up.
Well, great. Well, thank you for the update. We look forward to having you on next time.
Thank you.
And so next we are joined by Dan Roberts, the CEO and co-founder of home security system company, Scout Security, with the ticker code SCT. Good morning or good afternoon, Dan.
Good morning, good evening. Thanks everybody for sticking around. It's 10 p.m. here in Chicago, but I'm gonna try to bring some energy here to round out the group of presentations. So this is our first broker briefing. Very excited to be here and talk a little bit more about our business. So you can go right ahead to the next slide there, Jane. So Scout is a do-it-yourself wireless home security platform. And you're going to hear me say platform a number of times throughout this presentation. But everything we do is, installed on your phone, controlled from your phone, and provides the traditional home security coverage in a DIY package. So today we're going to talk a little bit about our platform, what that represents, and how we work with partners in a SaaS model. So you can go to the next slide there, Jane. So a couple things that we like about this industry, about this space, and what we've done in the past. First and foremost, it's a large and growing industry. So we are based here in Chicago. We do serve the US, but we are also rolling out on an international scale. So in March, we launched in Peru. We'll talk about that in a little bit, and are rolling out across Latin America. But globally, it is a large market. We've talked a lot about recurring monthly revenue throughout the presentations tonight. That is very core to Scout's model. We sell back to base, police dispatch, monitoring, video cloud storage, fire EMS dispatch through our monthly subscription plan. So RMR is core to what we do, and growing that RMR is really what we're focused on in the year ahead. We do have a number of key partners, and we'll get to the different models that Scout has. We do have a direct-to-consumer side, but our focus over the last 4 years has really been on our white label enterprise model, and growing our base with those partners. So we work with Prosegur, Windstream, Stanley Black & Decker, and Zego, and we'll talk a little bit more about each of those here in a minute. And then lastly, as both a partner from an integration standpoint and an investor, Amazon, we work with them through the Amazon Alexa Fund. So all the Alexa devices, and you can see the other devices that we integrate with. Our goal here is to integrate as many best-in-class products to our core product, because while hardware is a piece of what we do, it's not the core of what we do, and we want to integrate as many devices as we can so we don't have to make them. You can go to the next slide, Jane. So here you will see some of those devices, and I won't spend any particular amount of time on any one of them, but what it represents is everything you need for a home security system. So you have the indoor and outdoor cameras, video doorbells, on down the line, everything you need to guard your home. That's all controlled via your app. And so we're able to do that in a direct-to-consumer context. But again, our focus is really on allowing enterprise partners to white label that application, that end-to-end system that we have created. And so we're able to do everything from the firmware on the devices to the back-end systems, the user-facing applications, and all the integration. So we're able to do that, and all they have to do is really focus on the sales and marketing and converting users into paying customers. Next slide, please. So there are a couple different ways that we make money, and I think that's key to what we're talking about here tonight is first and foremost, when we sign up with a partner, we get development fees. So that's going to be the custom engineering that we do to adjust our platform for their branding, their colors, their customizations they might want to make to the app and the functionality for their user base. And then as that partner progresses to launch, we then generate the hardware revenue. And so again, we don't focus on hardware. It's not a major margin source for us, but we do generate some margin from that initial hardware sale. And we'll talk a little bit about how we work with the partners, but they own that equipment, and then it's on them to push it out to the end users. But what we're driving towards at the end of the day is really the recurring subscription fees. So again, we get that from video cloud storage, we get that from police, fire, EMS, dispatch. There are a number of ways that we can package that up for end users and offer that on sort of a spectrum of cost to our partners. And by selling through white label, we'll get into what the benefits are to Scout. And you also see how we can not only serve the US, but also now are starting to service on an international scale. So you can move to the next slide. So let's talk a little bit about the white label. Scout has been in business since 2013. Our platform is extremely robust. We've been building it in a direct-to-consumer context from 2013 to 2017. But in 2017, we really saw an opportunity to scale this business by working with enterprise clients. And you'll see here in a minute that we do have a number of multi-billion-dollar revenue clients that we work with. And if you start to think about what's valuable about that for Scout and what's valuable about that for our partners. Well, for Scout, we're no longer footing the customer acquisition costs. So in the direct-to-consumer world, as customer acquisition costs rise and there's a downward pressure on hardware pricing, hardware margin, that's not a battle we wanted to fight. But when we partner with a white label client, often they have very large subscriber bases, and we'll talk about that here in a minute, or unique distribution channels that we can launch into, still generate high margin recurring for ourselves, but not having to go into the customer acquisition game. And then on their side, if they haven't been building a DIY platform for the last 7-8 years, or they don't have that team internal, this is just a turnkey solution. So they can come to Scout, we'll do everything for them from sourcing the devices to setting up the platform, integrating with their systems. So all they have to do is leverage their existing base or their existing distribution, and they also get a high margin recurring revenue stream through our video cloud and security services. Next slide, Jen. So let's talk about a couple of those partners really quickly. And we do have a longer version of this presentation, but we only have 10 minutes tonight. So I'm going to go fast. So Zego is in the multi-tenant, multi-family space here in the US. They are owned by Paylease, which services 12 million residential apartments here in the US. Now, Paylease was predominantly a payment processing organization for those apartments, but now they're moving into smart apartments. So we're actually deploying systems through Zego into that base. Zego's already ordered 13,000 and has 10,000 of those systems deployed. But as you can see with an addressable market just in their portfolio of 12 million, we feel very bullish on where Zego can go with that smart apartment program. And so when they are operating, at full efficiency, they're pushing out about 1,000 systems a month. COVID was a little bit of an anomaly, which I think a lot of us understand. But we fully expect that this year that they'll be ramped right back up to where they were pre-COVID. So very excited about the multi-tenant, multi-family apartment block opportunity. More recently, and we've announced publicly, they'll be launching this quarter, we have Windstream. So Windstream is a $5 billion revenue telco, regional telco, based in the South Central US. They have about 1.3 million residential subscribers. If you think about, phone and VoIP revenues declining over the last 10 years, they are looking for opportunities not only to add revenue, but also replace revenue from the phone and VoIP. So it's a perfect situation for us, especially if you look at, high definition cameras and other things going over those networks. They need to be able to justify the cost of those networks, and we have the equipment and tangentially related services to offer to those customers. So we're very excited for that launch, and that'll be happening later. This is the last month of the quarter, so later this month. Next slide, please. And then Prosegur. So I want to call out, Prosegur is actually an investor in the company as well. So they invested in Scout in 2018. Prosegur is an international security company amongst other business lines. They operate in 26 countries and have about 500,000 traditional alarm connections around the globe. So as DIY security has come onto the scene, they know that that is a big part of the future of the industry. Now, here in the US, there's a lot of competition in the DIY space, but globally, like in Peru, for instance, where we just launched, in Latin America broadly, there really aren't DIY players. So we're very excited to be launching in multiple countries with Prosegur this year. We've only announced Peru, but there'll be 2 to 3 more countries coming up. And you can see here the example of the development fees that we get. So to do this custom program, to launch internationally, we generated $500,000 in development fees. That's pre-launch, just to get them going, just to get the customizations. Very excited what they can do globally with our product and getting that scaled. And then last but not least, from an investor a partner perspective, is Stanley Black & Decker. Again, hit a little strong by COVID, but we do operate with Stanley in the light commercial space. The bigger play there would be one of their consumer brands. Stanley has really unique distribution. If you look at the big box stores, Home Depot, Lowe's, it would be a huge opportunity for us to utilize their brands, utilize their distribution capabilities to deliver DIY security in whatever context that might take to end consumers. So very excited about Stanley and what they might do, and also the other partners that are coming down the pipe. Next slide, please. So I'm not going to spend much time here because we don't have a lot of time tonight, but I just want, if you have time, take a look at this slide, because it really spells out from our entry point level, sort of low cost camera standpoint, all the way up to our full on home security system, what we can do. If you look at a generic customer, say 1 million customers, and we're going after a 10% penetration, shows what we can do both from a hardware margin perspective, but more importantly, from a recurring revenue perspective. And if you see that over, 1, 2, 3 year period, if you can hit 10% of a large enterprise client's base, it has a massive impact on the bottom line. Anywhere from $130,000 to $600,000+ a month. And so we talked a lot about annualized recurring revenue tonight. This is a huge area, we believe, in terms of driving scale for Scout and being able to leverage existing customer base that have brand loyalty to those enterprise clients. Next slide, please. And here we just wanted to show our path to cash flow positive and profitability. And so we laid out, again, I won't spend a lot of time, but we laid out sort of what we had in overhead last year. We just did a capital raise in November of 2020. So we were flush with cash. Looking at our existing base of ARR, what we know is coming through from a hardware margin already, the white label development fees that we would expect to generate based on last year. And then you get into the base case, medium case, and high case in terms of what's possible this year with Prosegur rolling out in Peru and multiple other countries. in addition to Windstream launching this quarter. So very excited for where we're headed in calendar year 21 and what the future holds for the business. Last slide, please. And then here's just a quick corporate snapshot. So again, you have all the board members over on the right. I'm CEO and co-founder of the business. We closed yesterday at 7 cents, cash at bank. And, a couple final points as we close here. We have very small liability in terms of the enterprise model because we have parity terms between our enterprise partner clients and our suppliers. So, we are not, subsidizing or out the money for hardware at any point in time. We are at parity terms. So it's a very, capital efficient business from that standpoint. And that's all in service of getting to RMR. And as I said, we just raised some money in November. So we do have the cash that we need to grow. We've just recently brought on a new sales director. Very excited for the Windstream launch, where we're headed for the rest of 2021 and growing that recurring revenue base. I thank everybody for their time. And if there's any questions, I'd be happy to field those.
Well, thanks for the presentation, Dan. We've had a question come through. So was the Windstream deal delayed to upgrade the product for a more competitive pricing?
Yeah, so we did integrate a newer camera into that offering. And so that was a cost reduction for both the client, Windstream, and ourselves. So very excited about that. And it wasn't a significant delay given the global component shortages that have been going on. We've been able to avoid that in large part and don't consider it to have been that impactful from our plan.
Well, thank you again for joining us, and we look forward to having you on again soon.
Thank you so much.
And thank you all for joining us for the Broker Briefing Software as a Service Investor webinar. Recordings of today's presentations will be available online in the coming days on brokerbriefing.com. We look forward to hosting you again soon.